Block stock has absolutely crushed the market since it came public in 2015. However, investors have been put on a wild roller coaster ride. This former high flyer is currently down more than 50% from its 52-week high. So what does Block do? And does this company deserve a spot in your portfolio today? Here's everything you need to know about this business. My name is Brian Feroldi.
And my name is Brian Stoffel.
Thanks to StockCard.io for sponsoring today's video. As of the time in this recording, I am a shareholder of Block.
And I am not. So Brian, let's take a look at Block. This is a big organization valued at $71 billion, even after falling 50%. And it trades under the ticker SQ, which is a reference to its former name of Square.
Block's mission statement is to enable economic empowerment. This is simple, inspirational, and optional. This company really understands mission statements.
I agree, Brian, but let's see how they actually do this. There are two key reportable segments. The first is Square. That is focused on economic empowerment for businesses. The second part of this is Cash App, an in-house developed app that's focused on helping individuals achieve economic empowerment.
The Square business is one that you have undoubtedly come into contact with if you're a customer of a small or medium-sized merchant. Beyond just accepting payments at the company's point of sale terminals, the company actually offers a huge number of services to those businesses. This includes helping with things like marketing and loyalty programs, employee tracking and reporting, access to funds and financing deal, payroll, as well as numerous integrations that make it easy to add ancillary services.
Now, the Cash App side of the business is focused on helping individuals manage all of their finances from one convenient app. Now, usually users are brought into the ecosystem because the easy peer-to-peer payment system, again, very similar to PayPal's Venmo, but it goes far beyond that. You can use this app as a cash card. You can participate in Boosts, which is a rewards program offered by Block, and you can even get your funds direct deposited into the app and use it to buy stocks or Bitcoin.
Speaking of Bitcoin makes this company's financials relatively complex to understand. When one of the Cash App users actually buys Bitcoin in their account, Block has to record that as revenue on the top line. For that reason, the company's revenue number is going to bounce around like crazy depending on the price of Bitcoin.
So what can we do about that? Well, let's go back and revisit our income statement. Usually we look at revenue as a sign of how well the company is doing at getting people to buy more products. But because Bitcoin purchases have to be recorded as revenue, it's no longer such a good indicator.
Instead, management focuses on reporting gross profit, which strips out the cost of revenue, including Bitcoin. We think that looking at gross profit is a more accurate way to judge how Block's business is performing.
If that wasn't complicated enough, we also need to mention that Block closed on the acquisition of Afterpay, a key buy now, pay later player, and that acquisition is not included in the company's financials. When they eventually report their Q1 results, it will also include the results of Afterpay.
And the Afterpay acquisition was actually very sizable when compared to Block's business, coming in at $29 billion. So when we look at how Block actually makes its gross profit, currently about half of the total comes from subscription revenue and about 45% comes from usage-based revenue. The remaining 5% of revenue is currently coming from margin based on Bitcoin sales.
Now, when we look at the company's customer acquisition costs, they're actually pretty good. Block only has to spend about 35% of its gross profit on sales and marketing. And what that tells us is that Square and Cash App are brand names that are resonating with their customers.
When it comes to customer demand, we largely see this business as recession resistant. However, during the most recent downturn, many of Block's customers had a sharp reduction in revenue that impacted Block's revenues directly.
And because so much of this revenue is coming from either subscriptions or usage transaction-based products, the majority of revenue is recurring.
Turning to the company's moat, we do think that Block benefits from the network effect, specifically on the Cash App side. The more people that use Cash, the easier it is for those users to send cash between each other's users. However, we think that this is a low level of moat given the competition from companies such as Venmo.
We think that the more significant moat comes in terms of high switching costs. Once merchants start using more and more tools that the Square side of the business has to offer, they're loath to switch. And the same can be said for individuals. If they're using the Cash App to pay their bills, to get direct deposits, to invest, to even do their taxes, you'd need a really good reason to switch to a competitor. And we can see this playing out on the Block side of the business. Over the years, the number of merchants that are using four or more of those tools has grown substantially. That creates a sizable moat around the business.
We also think there's reason to give this company points for its brand name. The names Square, Cash App, and Afterpay are all well known in their respective niches and are growing in popularity.
When you put all of this together, we believe that Block's moat is expanding. However, we also recognize that it is coming under pressure from competition.
Turning to financials, the company's revenue growth has been extremely high over the last 3 years, coming in at 94%. However, keep in mind that this figure also includes Bitcoin sales, which are going to be very volatile moving forward.
When we look at the consolidated gross margin for all of Block's businesses, it comes in at about 25%, which doesn't sound great. But again, we have to back out the effect that those Bitcoin purchases have on the gross margin. If we look at the core money makers for this company, the subscription and the usage based products, the gross margin is a much healthier 55%.
One thing that I like about Block is that it has been focused on net income for many years. That remains true today as the company is currently generating positive net income from operations.
And I really love focusing on free cash flow. And on that respect, Block is also doing very well, having brought in over $700 million in free cash flow last year.
Block's balance sheet is in pretty good shape with nearly $7 billion in cash and only about $4.6 billion in debt. That gives it a strong net cash position.
And returns on capital are positive, which is saying something because many of the companies we review on this channel, that's not the case, but those returns on capital are still relatively low.
Turning to management, Block was founded by Jack Dorsey, who still remains the CEO today. If that name sounds familiar to you, that's because he founded another company you're probably familiar with, Twitter.
And employees give Block stellar reviews, earning 4.2 stars out of 5 on Glassdoor.com, and Dorsey getting a 91% approval rating.
Inside ownership at Block is also fairly high, coming in at about 12% or about $8 billion at current prices.
When we turn to Block's optionality, we see that there is a lot going on here. Obviously, Square and Cash App are the key drivers of the business, but we've talked about the role that Bitcoin will play. We've talked about the acquisition of Afterpay, which will start showing up soon in the company's financials. And we need to mention the acquisition of Tidal, a music streaming company. It's yet to be seen whether or not that was a good purchase or a waste of money, but we'll be interested to see how it plays out.
As for operating leverage, we think that Block has a whole bunch ahead of it, given that its costs are very high right now. This number will obviously bounce around as those acquisitions are incorporated, but longer term, we do not yet think that this company is fully optimized for profits.
When Block estimates its total addressable market, it's looking primarily at the Square and Cash App sides of the business. The inclusion of Bitcoin and soon Afterpay will expand it, but today it believes it has about a $145 billion market to go after, of which it's captured less than 5%.
Now, the company has been very acquisitive in recent years with purchases like Afterpay and Tidal, but most of this company's growth still comes from organic sources. However, moving forward, we think that the chance of this company continue to making acquisitions is high, and that is a risk worth watching.
So, how is Square done against the market as an investment? And the answer is really good. Despite falling over 50% from its recent highs, it is still smashing the market since its IPO and over the last 5 years.
Block also has a history of exceeding expectations, having done so in 3 out of the last 4 quarters, and that one other one was when it just met expectations perfectly.
And unsurprisingly, Block is not focused on returning cash to shareholders at this point. We hope one day in the future it will, but we understand this approach for now.
Turning to risks, there are a bunch for investors to keep in mind. First off, there's competition. Companies like Shopify, PayPal, and Affirm are all sizable direct competitors that Block's going to be competing against. There's also a whole host of smaller players such as Shift4, Lightspeed, Toast, Shopkeep, Wix, and on and on and on. The amount of capital that's gone into the fintech space is very high, so competition is definitely a risk for investors to watch.
It's also important to note that shareholders have consistently been diluted over time. Part of that is because the company sometimes uses stocks to make acquisitions, but another part is the fact that stock-based compensation is relatively high at Block.
We also think that this company's financial statements are hard to analyze, and after the Afterpay acquisition, they're going to become even harder.
It's also worth mentioning that outside forces definitely will play a role in how this company does, the primary one being the price of Bitcoin. And when we look at the company's valuation, we give it a medium high rating. True, it is trading for over 100 times trailing free cash flow. At the same time, we've talked about how gross profit is an important indicator, and it is currently trading for about 16 times gross profit.
Keep in mind that those numbers are going to change drastically after the Afterpay acquisition goes through, so take all of that with a huge grain of salt. So, what should investors watch to tell if this thesis is on track? First and foremost, keep an eye on gross profit. This is the primary metric that investors are going to use to tell whether or not this business is succeeding. We want to see this figure consistently go up and to the right.
Second, keep an eye on free cash flows. There are a lot of acquisitions that have taken place, and there's a lot of moving pieces. Block has done a great job of churning out cash while that's happened, but we need to see that continue and see that also grow in time.
Third, keep an eye on the company's non core businesses, which includes Bitcoin, title, and Afterpay. The company is sinking a lot of capital into those investments, and we want to see that they deliver for shareholders over the long term. So, how did Block score on our investing checklists? The answer there is pretty good. For me, Block got a 77, which is well into my investable category.
And for me, it got a score of 11, which is knocking on the door of being considered an anti fragile business.
All right, Brian, we just made our calls, so let's head on over to stockcard.io to hold ourselves accountable. I'm going to start in the anti-fragile portfolio. I'm going to place a new order. The ticker symbol here is SQ. I'm going to do a buy decision. We're recording this on Monday, April 11th. This is a $120 stock, so we're going to buy 8 shares. The score on your framework was 11. Then I'm going to head on over to my quality checklist, and I'm going to do the exact same thing.
And while Brian's doing that, we want to remind people that you can go on over to stockcard.io and view both of our portfolios for free. But you can also enter the Beat the Brian's contest, where you pick 5 stocks that you think will perform the best starting today and going until the end of 2022. There are prizes for those that beat us on a quarterly basis, and our overall winner will win $1,000.
Overall, we think that Block is a high quality business that has a bright future ahead, but there are certainly plenty of risks to keep in mind. If you like this video, give it the thumbs up and let us know in the comment section below. Brian's out.